Coming up next is our final panel for the day, but I think it's going to be an action-packed panel when I look at who's in it. Our moderator for this panel is Mr. Carmelo Kokuza, Head of Advisory and Blending for the European Investment Bank. Welcome, Mr. Kokuza. We have Mr. Robert Backland, also from the European Union delegation to Kenya. Welcome. We have Mr. Jean-Louis Perrier, back up here again. Welcome back. We have Mr. Ilebi Sadis, Chief Executive Officer of ETHSwitch, which is a leading e-payment switch infrastructure service provider in Ethiopia. So as you can see, the lineup is very much geared up for this discussion. Yes, please come up. And we have, of course, Ms. Jane Gidali joining us from Enterprise Development at MasterCard, and Mr. Jack Ngare, Chief Technical Director at Google East Africa. Welcome, ladies and gentlemen.
Here and then as you take your seats. So good afternoon, everyone. I'm Carmelo Kokuza from European Investment Bank. The Advisory and Blending Unit, as just announced. Thank you very much, James, for introducing me and the panel already. Actually, yes, we are facing some existential challenges for this panel because not only are we after lunch, but we're also before the end of the forum. But this is, this is one of the privileges I've had as being part of the organizing committee together with James. We decided at least we'll save the best till last. So the digitalization, you've all heard it during the previous panels, it just keeps cropping up over and over again in trade, in securitization, in guarantees, and everything that we've been talking about, the green bond issuances. So digitalization is key. But in this particular panel, I'd like to specifically focus on digital inclusion. And allow me just to give an overview before I go into the discussion. We're going to look at the nexus between digital revolution, improved access to finance, and inclusive growth. And it's digital technology and infrastructure investment in the financial sector contributing to financial inclusion and sustainable development. When we look at it, access to internet is key. If we take the case of Kenya, for example, which leads, by the way, the Horn of Africa in terms of innovation, we already have the highest percentage of internet users all across Africa, and that's 85% of the users. In fact, you heard it in yesterday's sessions that by the end of the decade, we will have 800 million users of internet across Africa. So that's a lot. And this opens vast opportunities to enter the modern and globalized economy where people will be able to access digital services in terms of business, governance, democracy, and social services. And if I look back, if any silver lining has emerged out of the COVID-19 pandemic, I would say that a critical one has been the accelerated pace of digital transformation to create value for citizens and businesses across the globe, but particularly here in Africa. And you heard the EU ambassador this morning, Henriette Geiger, who talked about this Global Gateway Initiative. So we, as the European Union, the member states, the institution that I represent, the European Investment Bank, we are committed as Team Europe to support programs that will, in one hand, reduce the digital gap and improve digital connectivity, that will facilitate the digital economy transformation, upscaling digital skills and building on digital innovation ecosystem, and that 3, will deliver open and inclusive digital governance to give citizens access to e-government services for a more efficient and transparent public service delivery. Currently in Kenya, we have some 20 ongoing Team Europe projects and programs in these 3 areas that I just mentioned. We expect to mobilize some 450 million euros, which is approximately 58.3 billion Kenyan shillings. And when we look at the financial services across the sector, strengthening of collaboration and to enhance the digital payments, mobile wallets, interoperability of financial services all seem to be pointing to a new era of cashless payments and widening use of digital financial instruments. But there are prerequisites and challenges that must be overcome if this financial services, the digital revolution, is to bear success and bring about a widespread benefits to the entire population. And these are exactly the topics that we would like to cover in this debate. How do we make sure that we provide for everyone and that no one is left behind? How do we support the successful rollout of digital services? We are looking, for example, at digital identity. Almost half of the sub-Saharan African population still has no legal identity. And how do we bank the unbanked, even in the most remote areas, so that they too can access financial services? So we'll be looking at payment platforms that do not necessarily require the opening of bank accounts. And the other question we'd like to address is how do we ensure the digital payment systems connect to each other and are able to transact? We'll be looking at how interoperability will be key and how this will need to be adequately regulated. And we'll look at the rise of fintechs, of course, which has been driven by the fact that digital payments substantially reduce transacting costs, thereby benefiting the customers. So how can we bring down the risk pricing so that lending terms can become more affordable? We would definitely be looking at how potentially the use of big data, we heard it yesterday, the banks and financial institutions collect on a daily basis, and how can this data be used to strengthen credit bureaus or potentially also institutionalize know your customer KYC requirements. And finally, you heard it in the presentation by Jean-Louis Perrier of the ACRC just now. How do we build cyber resilience and combat the threat of the integrity of our financial systems, particularly with regards to digital payments? I still remember the deputy governor of the central bank who attended this forum 4 years ago, and she mentioned the fact that in Kenya, cybercrime is a bigger threat than terrorism. I mean, that says a lot in terms of the kind of the challenge that we are facing. And therefore, let me just quickly jump into the discussion. I'd like to welcome our colleagues. First of all, maybe farthest from me, it's Robert Buckland from the EU delegation in Kenya. He's counselor and working on Team Europe investments. And then next to him, yes, you've just seen him, Jean-Louis Perrier of the Africa Cybersecurity Resource Center. Next to him, Linda Gidali, the Director of Enterprise Development at MasterCard. And next to him, we have Ilbes Addis, the CEO of EthSwitch in Ethiopia. We'll be talking to him about interoperability. And last but not least, we have Jack Ngare, who's the CTO of Google East Africa. Welcome. I'll come and join you. And perhaps I will start with a question to each one of you with regards to your respective contributions in terms of dealing with digital payments and supporting digital transactions, particularly within the financial sector. Let me start with you, Jack, and then we go around the whole panel.
Sure. Thanks, Camilo. I'd like to make 3 observations before I answer the question. And the first one is our PR guys get so sensitive about titles. I don't work for Google East Africa. I actually work for the office of the CTO for Google. So I don't have to write me an email afterwards and say, have you elevated yourself? So that's the first observation. The second observation I'd like to make is I've been 10 years in banking before that. So if all bankers here, if you want to see what you look like when you leave banking, that's me. More white hair, Yeah, and not as young as I used to be. I'm so sorry. There's no light at the end of the tunnel. And the last observation I want to make, the third one, is if there are any hard questions that Camelo puts to me and I don't know the answer, I'll say, please Google it. And I swear I'm not advertising. I just don't know the answer. Yeah, but to your question as far as digitization of payments and interoperability is concerned. So, back in my days, I grew up here in Kenya before, I went outside and came back. And, I saw a significant shift from the time I was growing up here, where, in the rural villages, et cetera, where people had to walk distances to get to a banking facility. And at that particular point in time, sometime in the 90s, a lot of the multinational banks were telling the locals that if you don't have more than $100 in your bank account, please come and take your money, and it's not good to bank with us here. And I'm sure those of you in the room remember that whole story. And that bred was fertile ground. Out of that disparity and lack of dignity, perhaps the locals were afforded, was a fertile ground for breeding of local banks that took over a lot of those transactions and thought about a new business model that could work in sub-Saharan Africa. And that created the advent of agency banking. It created the advent of USSD banking, where they use not feature phones to do their banking. And it created this whole revolution that places like Kenya, financial inclusivity jumped from the low 20s to the high 90s. And of course, mobile money came as well in that fray. What then happened was that a lot of the services that were being run by banks, were taken up by telcos. And eventually the model has been that there's also a collaboration that exists between mobile wallets, telcos, and banks that exist, perhaps addressing different segments of the market. So you'll find that SMEs and large corporates will largely go to banks, and you'll find the bottom of the pyramid would largely go to telco services. Having said that, the liquidity is always provided by banks, and that is the encouraging piece. As Google, we have been closely monitoring all this in terms of seeing where do we play in this, and significant for us is the data play that we see that is being given by a lot of federated data that sits in people's phones. Those of you with Android devices here know that we have updated our privacy policies for financial services to include that you cannot download, people who are giving loan sharks, basically from the Play Store, giving bottom of the pyramid loans and demanding, all sorts of, huge amounts of interests. But having said that, it became a rich, fertile ground to provide data to financial institutions of what are the behaviors of certain customers within privacy norms, within the law, within regulation, that they can be used to score these particular customers and provide them with more richer, enabled financial services. And to this SMEs and businesses, the same thing applies. You are able to get more information about your businesses, about your customers, and provide them with a rich set of services for financial inclusion. In closing, a lot of initiatives have been done across the industries, and I've seen this throughout sub-Saharan Africa, for sharing and collaboration of data across industry players. A good example of this is for example, within the Kenyan ecosystem, there's PesaLink that actually creates this initiative to collaborate between banks, and that has been good for the ecosystem. Having said that, a lot of open questions still arise, around privacy of data, around who has responsibility to safeguard them, etc. And so that is my view of how the ecosystem has evolved so far.
Thank you. Thanks very much, Jack. Let's move to Ethiopia. Yilebes.
All right. Thank you. I will focus only on the interoperability and the case of Ethiopia. When we start the interoperability, the first challenge was getting acceptance of the players. They think all those banks providing their own service for their only customers would be good for themselves and would make them competent in the market as well. So the initial challenge was solved through addressing the 4 pillars, actually. The first is the trust issue, and the second is the economics, and the third was the technology and the regulatory requirements. But when we look at initially, we started interoperability with only ATM. that ATM interoperability, it allowed, okay, the customer, instead of finding his own ATMs, his bank's ATMs, and getting a service in any ATM that brings real value. And it showed the considerable number of transactions increasing on monthly basis. Then we came to the POS. But one thing that we didn't give attention at then was the instant payment and the mobile channels. We recently implemented last year from bank to bank transfer. And that thing, what we realized is there is a real demand from the customer side, which became beyond our expectation. And then what we understood is when after becoming interoperable is when there is the service interruption, there is a huge noise from the customers, because once you start providing the service, you cannot interrupt it. Once they become familiar with the service and see the benefits, you cannot interrupt it. What actual benefits can this bring in the financial inclusion and the access to finance and the overall digital payments? So actually, in creating interoperability, what you will bring is you will avoid one of the barriers to access, because there are channels that can be easily made interoperably, and it allows access to everyone. So it fosters financial inclusion. The second one, when it comes to interoperability, they mentioned, and those 4 pillars in the ecosystem, one of the challenges that for the financial inclusion, which is the cost, and it helps us to have the affordable pricing, because that is the ecosystem that you can set up in collaboration with all players and banks, payment operators, and microfinance institutes. In addition to creating interoperability, actually, in this digital revolution, one of the systems that can be implemented in collaboration with financial institutions is shared infrastructure and platforms. So the shared infrastructure and platforms that can be also implemented and help to provide finance access to SMEs is one we can consider and mention a credit reporting system, which is the challenge for financiers to know about the borrowers, which is also the challenge to know the continuous history of those SMEs and so on. So having those systems will also help to finance the SMEs. And I believe the other component that we can also consider in providing the shared infrastructure in the era of not only in the SME, but also for overall players is the security component. But when it comes to the interoperability and the shared infrastructure, in addition to financial inclusion and providing access to finance, it also brings and enables the national digital financial payment strategies to be implemented. The interoperability that I was talking about is only the interoperability in one country level. But when it comes to cross-border payment, the interoperability becomes more challenging, because the regulatory requirement is not limited to a given country. And it's not simply developed by the central bank of the country and forwarded to other players. It requires collaboration of the regulators of different central banks in different countries. And it also requires actually to look at the technical integration and the technical standards and requirements perspective as well. When we fulfill this technology and the regulatory and the economics and the trust issue, even between different countries, then it can bring the interoperability, which at the end, it facilitates the trade, cross-border trades as well. So interoperability has a lot, benefits with regard to the financial inclusion, overall finance, trade, and financing of SMEs. Thank you.
Thanks very much for that coverage, especially with regards to interoperability. Let's move to the card payment system, which is actually, they've been the pioneers, Linda, MasterCard. Can you tell us a little bit more about that?
Okay. So MasterCard. So let me first define what we are trying to do in this region from a payment digitization perspective. So MasterCard is known globally to be a technology company provider that works with licensed or regulated institutions, normally financial institutions, to offer products or a platform to be able to accept payments through merchants and to issue cards to consumers. So that's what we're known all over the world as a brand. I'll break it down into two. So with years, we've realized that we need to also drive a financial and economic inclusion agenda. So on the one side, we have the core, which is your business as usual, where you're offering your credit cards and also your debit cards in whatever flavor through financial institutions. And what we have done with the core also is expand that to be able to have a business model that supports working with fintechs and even mobile wallet operators in the region and even globally. And with that, improved our business model, not only looking at cross-border or e-com transactions, but also looking at domestic transactions, looking at the pricing per transaction and being sensitive around that. And that is the core. So remember, that's what we are known as a brand all over the world, working with financial institutions. We also have a humanitarian and development side of MasterCard that is addresses key factors of financial inclusion and economic inclusion. We have a set of platform also under the flagship product, which is Community Pass. Now, Community Pass, what it does is, in terms of addressing working in rural areas, is offline capability. So you still and also being able to unlock use cases within what we term as the unbanked. So within the Community Pass product, we also have a stream to address use cases that are sensitive around the unbanked, sensitive to transaction pricing. We have a flagship that addresses farmers, and this is a marketplace. It's called Farm Pass, where the farmer transactions can be digitized. Buyers can also be brought into the platform, and then this is consumed or is extended to the farmers through partnerships, where we're not saying limited to only financial institutions, but also fintechs. And they're called program owners. And of course, what we're trying to see is working with partnerships is funding the last mile, because remember, because of the capability of being offline, it's infrastructure heavy. So we always have to work with partnerships to be able to take care of the last mile. Within the Community Pass value proposition, you also have Aid Pass, which is basically working with individuals or profiling them so they can be able to get subsidies or aid benefits. The key consumers are governments. When you're looking at like farmers, subsidy payment, being able to work with the farmers, identify them, and also capture their metrics and then do subsidies so that it's relevant to them. And this is achieved through the card, but also wallet capability onto the card that we have under the flagship. Then we have Aid Pass, which is a subsidy payment, and then we have Wellness Pass. So, okay, Wellness Pass is where you do the individuals, profile them. Their health records can be stored in the card in terms of wallet. They go to a health clinic, they can be able to get service. This was very important when we had one of the biggest successful projects in Ethiopia, and which was funded by the World Bank. It's funded by very many institutions. Of importance within this region is we have Commerce Pass, which looks at SME, micro SME transactions, bearing in mind the low value of the ticket sizes, digitizing that, and being able to run the transactions within the micro SME ecosystem. What this does is that the personas are able to be profiled through the data, and then the data can be used with financial institutions and other partners to be able to offer value-add services. But then moving them from the unbanked and where they are not able to have a banking identity, but to the banked, and then be able to consideration for the value-add services as the other players. So that's what we're doing from a MasterCard perspective to drive financial inclusion and also economic consideration for the unbanked. Thank you.
Thank you. Thanks very much, Linda. And it's quite extensive. We can go a little bit into detail later on. And we've heard about ACRC. I don't think we need to go to, if I can jump straight into the European Union delegation, and perhaps hear a little bit from Robert about some of these Team Europe initiatives that you're engaging in, particularly with regards to digital and financial inclusion.
Good afternoon to everyone. I'm Robert Backlund from the EU delegation here in Nairobi. I'm coordinating this digital Team Europe initiatives, which Carmelo referred to in the beginning. In addition to what we do here at the Kenyan level, we are also working a lot at the regional level, I should say, in the area of cybersecurity, where we are trying to tap loopholes in both here in Kenya, in Djibouti, and in Somalia. We're working on supporting secure and resilient digital connectivity supply chains provided by trusted suppliers, and we also work on strengthening the resilience of internet in the region, and by working with the private sector on undersea cables. Notably, what we do on digitalization here is by mandate of the partnership that the EU has with the African Union. They have notably a digital economy task force which identifies areas for cooperation throughout Africa. And what we do here in Kenya is that we implement pieces of it that we have selected to be relevant here. Notably, Kenya is perhaps slightly more advanced than most other African countries, but it also opens more opportunities, and we can also be more advanced in the approach from the EU. What I would like to stress a little bit here, I know that the forum so far has already been talking a lot about technologies, about regulations, about cybersecurity, and this is of course like the hand in the pocket for what we are doing as well. I think we are framing ourselves quite well here. This is of course creating a number of opportunities for development and for many people to get a better life, not only work life, because we are entrusting our digital tools to our personal life as well when it comes to loans and savings and our social relations and all that. But the core, the bottom of the systems is precisely the regulations and the policies. So that is where we from the EU side take a point of departure. It's definitely our belief that African countries is needing of a long-term set of policies and regulations to guide actors in finance and in the private sector. Now it's the role of the governments to set these policies together with the private sector and together with interest organizations. These policies create predictability and security over time and helping everyone knowing where to invest. But it also creates a transparency towards customers and clients. We heard in the introduction the high level of internet crime that is happening here in Kenya. And if we are going to invest in these systems that are needed to combat the crimes, we need a quite clear engagement from the governments and from the public sector, because these are not problems that each and every bank can solve individually. From the EU, we have been working a lot on the General Data Protection Regulation, which is quite famous by now, the GDPR, which is protecting people's lives from certain types of exploitation. It has been a great inspiration to Kenya and to several of the African countries. There are other EU regulations that might be interesting to look deeper into, together with you and together with African actors, which include the Data Governance Act, the Cybersecurity Strategy, Artificial Intelligence Act, the Digital Services Act, the Digital Markets Act. What I'm saying is that at the EU level, we have tried to do a bit of the homework, and we are open to discussion and open to share, knowing that Africa needs to find its own solutions. We also believe that we, as international actors, can be a partner, sometimes for dialogue, sometimes for different kinds of support measures.
Thanks, Robert. And in fact, I just want to complement what you said, because as Team Europe, we complement each other, because you look more at the policy and regulatory framework, whereas the EIB would look more into terms of supporting some of the infrastructure. We've talked about optic fiber cables, submarine cables in some cases. The investments some of these banks will have to undertake in terms of digital requirements. And we were quite keen to support the banking sector in this regard and putting in place the appropriate measures also to prevent cybersecurity. Jean-Louis, if I can just come to you and perhaps link with EdSwitch and the interoperability. So obviously, I'm trying to think like a criminal, because looking from a cyber perspective and a cybercrime perspective, the mind of a cyber criminal will probably look, how can I tap into the interoperability of some of these payment systems and be able to divert some of the money to other sources? We were talking about it earlier. And we wanted to know from your perspective, how can we prevent, would it be the central bank to regulate all of this? Who would be the responsible party in order to ensure that the appropriate systems are in place to prevent this kind of cybersecurity with regards to digital payments?
Yeah. It is a very interesting topic. I think we could discuss for a long time, because what we have learned in cybersecurity in the last 10 or 15 years, and I think many errors have been made in the world. A lot of money has been spent, sometimes with limited results. We have seen before that technology alone is important, but it is not sufficient. Governance and norms are important, but are not sufficient. Policies are important for the reasons that have been shared before, but are also not sufficient to prevent cybercrime. So if you have the curiosity to read the papers from the FBI director, you will see that he spent half of his time, and he has many tasks, obviously, talking about cybercrime. And in most of his cybercrime talks, he speaks about collaboration, about public-private partnership, about collaboration with the law enforcement, but also within the sectors, like I have said before. So we really should take a quite holistic approach. Each leverage technology policy as is its importance, but also we should also focus on the places where less investments have been made in the past, which is developing a collective intelligence, threat information, sharing also cybersecurity resources, not spending each of us the same money many times, taking the results from EU project done for few countries, for example, to make a massive rollout to the financial sector. So we have many leverage that we should use simultaneously. And I would like also to stress, maybe the desk can share a slide I have prepared. I think besides collaboration, in information sharing, we have something that we have to develop is put the ecosystem mode on. do you find my slide? It's slide 13 in the first presentation. Yeah, it will be it will be easier. So I have taken an example of what has been done in Luxembourg in the last 20 years in terms of developing a supporting ecosystem on cybersecurity. Luxembourg is a small country, 660,000 inhabitants, but we have 120 banks, 17 payment institutions, 11 electronic money institutions, more than 3,000 investment funds, 90 insurances. It is a leading place for investment funds, microfinance funds, green funds, and Eurobonds, and many other things. What has been done gathering all the stakeholders in this past 20 years, now we have about more than 300 actors in terms of cybersecurity. For such a small country, it is quite huge, with almost 9,000 people approximately working in 93 companies that have cybersecurity as a core business. We have 33 startups whose main business is cybersecurity. So this has been developed in the last 20 years thanks to the efforts of the government, of the different financial insurance regulators, of education system, not only higher education, but also in the vocational and education training, VET, and with a number of sectoral public-private partnerships. So I would recommend that we start thinking in an ecosystem mind, to make sure that the progresses we make are sustainable and will, in term, at a longer term, have the more value for the community.
Thanks very much. I mean, yeah, that's a very exclusive example with regards to Luxembourg. But let's come back. Let's come back to Kenya and East Africa, especially. Jack, so big data. I know that Google has all the information, personal information that we are quite often quite unwilling to share. But I mean, I know you have this access to this info. How could you put it to a productive use for the financial institutions in terms of delivering services that are beneficial to them in terms of client screening, client protection? So I'm talking more like the credit bureaus, but also potentially screening clients for KYC requirements, which is something that is more and more becoming more and more difficult and obviously time-consuming when you're trying to provide loans to a specific client. How do you consolidate all this data to the advantage of financial institutions?
Yeah, I mean, that's a great question. Just laying out the foundation of why that's important right now in Africa compared to perhaps many other places in the world. You know, it's a number that's touted. You know, the median age for Africa is 19. Just to give you context, the median age for China is 38, for India is 27, for the US is heading towards 40. So you can imagine such a youthful population that we have in Africa, who are all digital natives. It's so youthful that I guess all of us in the room here are probably grandpas compared to the people on the street right now because they're very young. So being digital natives, a lot of the services that we figure out that will make up the identity of individuals into the future should not necessarily be an ID card, a birth certificate, or anything else like that. It'll be probably their mobile or whatever electronic or digital device they use. The investment that has been done by a lot of big tech companies, whether it's Google, AWS, Microsoft, etc., reside on capitalizing on the data, on everything that you have on your hand right now. And that has proved to be a very successful model. If you look at Microsoft, 30% of their revenues come from harvesting the data that you and your organizations use on M365 and on their cloud. If it's Google, 80% comes from the data we harvest from a lot of the devices you do and the search that you work on, obviously within the confines of privacy, etc., and minimizing the data. Translating that to banks, how then do banks take advantage of this movement of data and the digital natives to enhance their banking capabilities. I'll give an example. It's not from here in Africa, but it's a project I'm working on right now with one of the banks in Singapore. And the idea here is to build within trade finance, ESG reporting. So you have a whole set of suppliers, you have a whole set of buyers, you have to do bank guarantees, you have to know the shipping line they're using. How do you incorporate the emissions across the whole value chain? From farm, so to speak, or from export to the import side and to the table. And so using a lot of the big data platforms that we have as Google, we're able to harvest the data for the SMEs that sit perhaps in a farm sitting here in Nyanyuki, in Kenya, or Naivasha, that's growing horticulture, ingesting that information, building it up and checking that it actually meets the baseline of sustainability across for Africa or the industry specific, all through to the shipping liners score for ESG, all the way to the other side. And so using our own data platforms, we're able to give banks a unified view of saying that if you finance this particular trade finance, then this is what your ESG would look like. Does it go up? Does it go down? And of course, every other thing that comes with it, over-invoicing, under-invoicing, prohibited goods, line of business goods, all those are just incidental benefits of using data for trade finance cross-border. Now, coming it down to Africa, a lot of the so-called digital apps that do lending across the continent, harvested this, whether it's Opay in Nigeria or it's Tala and Branch in East Africa, all used the app that you download on your phone and sets out a couple of privacy rules for you. And when you accept it, they harvest a lot of information from your device, right down to doing credit scoring, for example, knowing that if at 1 a.m. your phone is at a certain place, that's probably where you stay. Now, for some of them, it was used for positive. For some of them, it was used for negative. And it's sometimes a learning curve, in terms of saying, okay, this is innovation, but we can't let innovation go too far in terms of being too invasive, and so we have to pull it back. The gentleman talk about the laws that are coming up in a lot of the world, are actually curbing some of this to make sure that we protect the consumers. But the data that we're able to take, and customers are aware that they're given this data, then you ingest them and you can share them with financial institutions, and then financial institutions anonymize them, and then can create some sort of credit bureau where you get data from across the ecosystem, not different than what they do in cybersecurity, because the idea of the cybersecurity is that they harvest data from multiple touch points and multiple data points, and then create a unified view of whether something's a threat or is benign. And so the same thing in credit scoring, for example, getting all this data from federated sources, amalgamating them, cleaning it up, and then creating a score for an individual. You don't need an ID for that. You don't need anything else for that. You just use the systems to power a lot of your credit scoring. And we've seen successes across the board. The 1 billion, which is equivalent to about let me do calculations. It's about $100 million every day that, for example, one of the telcos here in Kenya lend out. It's purely a data play. Just harvesting information and giving same-day credit to individuals and benefiting the locals. The last thing I want to say is, in my previous life, we used the same sort of data to score a certain area. So in downtown Nairobi, there's an area where there are ladies who come there at 3 a.m. with produce and sell it to restaurants, sell it to households. But they are at the market at 3 a.m. with potatoes, with cabbages, etc. Now, we knew that if you are going to ask for a loan from that region, you're probably someone who is in that trade at 3 a.m. And so our graph for loans at 3 a.m. at that region would spike up, but the rest of the day it will come down. And so, using just that, we call it temporal data, time-based data. We increase their loan limits at that particular point in time, but because we don't want them to go and do other things with the money later on, we throttle it down. And so that's a good use of data.
Yeah, no, and I can see the connection between what you are saying, that we don't need digital IDs, we don't need national IDs, we just need all the data, and basically we all go back to having one phone. And in yesterday's panel, we were discussing some of the banks that were saying, taking advantage of the fact that they have so many branches. Do we need branches anymore? If everybody's got a phone, isn't that enough? Your phone is your banking tool, is your financial financial tool. Maybe we come to you, Linda, and talk, Jane, sorry, about your farm pass and the community pass, and how you intend to, how do you have them, it becomes like a financial inclusion tool that can be used by MasterCard in terms of supporting some of these smallholder farmers getting access to finance. How does it work? I mean, I understand that some of these are completely unbanked. You're talking to really the rural population. How do you put it in place? Give us an example of that.
Okay. So I'll look at what we have done in Kenya with one of the financial institutions that's in the cooperative space. And they are utilizing the technology as the platform to be able to go and identify farmers through what we call the cooperative society or farmer program owners, and giving them a digital identity. Now what it does, gives the farmer a card, but they also have an app, which is both USSD and also Android on device. Now, every time the farmer interacts with the cooperative society, those transactions in terms of input, maybe they're getting input loans, it's included onto the digital platform. And at the end of the day, what happens is that the interaction with the farmer is very deliberate in terms of even sensitivity around the crop that they're growing, the inputs that they need is captured on the platform as a loan. And then when the farmer comes back and says, hey, I've grown and this is my produce, then they balance it out with what the sales, because what they does on the platform also, they are able to onboard buyers, and the buyers are able to pre-order the produce from the farmers based on the platform. So it's a digital marketplace driving digitization of payments within the farmer ecosystem. What this has done is most of the farmers are embracing this technology because they see there's no need to borrow working capital from the financial institution, but there's arrangement with input suppliers who can be able to work with the banks and the cooperatives to extend the value to the farmers, which is very specific up to the crop. Now, what does this do to the farmer is better pricing. So at the end of the day, with the buyers, the platform has enabled buyers to be onboarded from global buyers also. There's, of course, sensitivity around the regulated crops like coffee, but with the unregulated crops like even bananas or groundnuts, there's play, and you can see the digitization of that has actually improved the price value of the crop produce, and most importantly, is just engage the ecosystem. And the farmer has been able to have a unique financial identity that can then be able to be scored and given value at the end of the day. And the value does not have to be cash. It can be working capital as cash, but also input. So there's no need for them to invest on working capital. And it solved a beautiful chain within the agriculture and the farmer space.
And going on from there, if I understand correctly, you're also collecting information about each farmer, about the credit scoring systems and the credit analysis, which brings back to what Jack was saying, and the big data collection is obviously key. In your case, not only for credit scoring, but also for information about crops. Exactly. And being able to bring down the prices of lending or being able to access finance. So the whole point of the digital transaction is actually to lower the cost of funding, and that the end consumers are the ones who benefit from reduced cost of borrowing as well. So that's what we are trying to do, and I think each one of you has very clearly explained now how we are trying to bring all these elements together to the advantage of the final consumers, the clients, the customers, the citizens who have access to these digital financial services. I think I'll stop here because I'm pretty sure there's going to be a lot of pertinent questions that are coming up, and I'd like to open the floor. I see we got time for quite a number of questions, and if you want to have a specific question put up, please have your hands, and then we'll come to you with a microphone. Yes, at the back, Giovanni.
Thank you, and thank you very much for the very interesting presentation and discussions. I just want a little bit of a clarification on this last, the Farm Pass platform. I was curious to understand, from what you explained, the system is up and running, but can you just give us a little bit of a flavor of the scale in terms of the geographical coverage, of the number of farmers that have engaged in this, and the prospects that you see for that to grow here in the country and maybe also in the region? Thank you.
But I know we also have live instances where the program runs in India, but I don't have the data for that. But I have the data for East Africa. So in Kenya, we rolled out with a cooperative, a financial institution within the cooperative play. Within 2 months, I think we've done about 400,000 farmers. And because the sensitivity is around regulation, they want to have the telephone number and the ID. So that's in Kenya. In Uganda, we have about 1 million farmers, and the program owner right now, the one who owns the platform, is a fintech. So the fintech is in the agribusiness or agri-fintech play, offering certain value to farmers, but we have expanded that because they were input, now they're onboarding buyers. So it's an ecosystem play. The fintech is not regulated to offer payments or take deposits. So then, now that we have the farmer data and we have clear profiles of what the farmers look like and their needs, then now we are looking at engaging a financial institution within that Uganda market, so that there's a plug-in whereby now deposit taking can happen and even credit scoring and loan can be done. The fintech play, they are looking at having a loan book, but financed by a financial institution, so that they can have enough float to be able to service the whole ecosystem. So that is Uganda. In Tanzania, we have through an agri-fintech again, we have onboarded about actually 500K farmers. Again, there was sensitivity around government involvement within the farmer digitization play, which we have now, which worked for the benefit because we had the rich data. Exposing that to the government, they said, hey, then this is interesting. And we were working with the crops which are not regulated. What the government has said, then let's look at expanding this further. Again, agri-fintech play, linking up with the financial institution to offer them the cards and the wallets, and then the value-add service in terms of loan growth. So I would say from an East Africa perspective, we have been able to profile about 2 million shy farmers within the 3 countries. Expanding this, of course, to other regions. And even the licensing is not the same way we work with financial institutions, because remember, with the core, we only work with regulated financial institutions, but with this part of the world, we work with even fintechs and then look at them as program owners. Thank you.
Any further questions from the audience or from the virtual platform? Because in the meantime, perhaps sorry. Yes, go ahead. Yes, we have.
Sorry, John with your African Ender. My question is about gender inclusivity, and I think Jack spoke and gave an example of way in which data was used to drive the inclusion of women, from an MSME point of view. My question is, besides regulation, what other strategies, for example, can be embedded in products and services to ensure that we drive more deliberate inclusion of women in these services and products and in their use in a sustainable way? Thanks.
And who are you addressing the question to?
The panel.
The whole panel.
Yes. Any of them, though Mr. Addis could, and perhaps Ms. Gillan could pick it up. Thanks. Gidali.
Go ahead.
All right. Thank you. So actually, when it comes to the interoperability and the services that we provided, and when we want to scale up our platform, what we did, we get the funding from Africa Development Bank through ADFI, then additional funding from PMGF, and as you mentioned, from African India. One of the key concerns was the gender issue, how the platform to be implemented can bring the gender balancing in providing those services. So as the national switch, our goals is creating complete channel interoperability. So all possible channels that can be ATM, POS, mobile, online. And the second one is enabling all financial use cases through the financial institutes. We don't directly provide service to merchants or consumers, but we connect all players, banks, MFIs, and payment operators. So how can we bring that gender component in the system and ensure that the possible use cases, whether it's a payment use case, whether it's a credit or a saving use case, can it enable? So what we looked at is we took, so in every use case, there must be the field or a component that can include the gender as well, so that we can later on filter the data and how it's being served and do analysis later on. And they, in addition to the creditworthiness, looking at how is the default rate, how is the service, what kind of intervention is required as well. So we try to make it part of that. But it's not from the core system perspective. It has to be taken from the one who actually enables that use case on the channel. So all financial institutes should include in their products and services and in each use case those gender. And again, it's not simply having the gender as a field. Actually, there must be also the use case that can directly support female SMEs, as well as that can directly also enable the female savers that is in the household as well. So the direct, the platform providers and the use case enablers should include that component. That's how we take from our perspective. Thank you.
And I can also confirm, I mean, there's been a study from CGAP that has looked into this gender inclusion, and they've proven that they've actually got research that proves that, you know, the support that digital financial services have provided have actually supported the financial inclusion of women across sub-Saharan Africa, but also across the globe. So it's obviously a key component in terms of gender inclusion into the financial system. Are there any other questions from your side? I mean, I would like perhaps maybe to put a question to the panel with regards to where do we go from now? I mean, the idea is, okay, we're going to become cashless. Are we also going to become cardless and we just use our mobile phones from now on? Jack.
I hope so. So in my view, I think that there's still a lot of work that needs to be done on the ecosystem in Africa. Technology has been used largely by banks, financial institutions, and fintechs and many players. But the marginal cost of technology services from a financial institution perspective is still quite high. And it continues to be high. If you're talking about card transactions, you know, we get charged a merchant service commission in Kenya, for example, anywhere between 1.6% upwards to 4%. Now, to make sense for an SME to do a transaction, it has to be below 0.5%. The average cost of an M-Pesa transaction in Kenya is 10% of the value. It has to go down to 0.something%. If it's cross-border, you know, it's anywhere between 1 to 10% of the value. And so how do you create services leveraging off technology? Because the promise that people like me give everybody is that if you use technology, you'll gain scale and you'll put your costs down. But you know, we've gained the scale part perhaps, but the costs are still quite high. And so we need to bring it down. And questions such as data sovereignty, laws, etc. I mean, I go to 54 countries in Africa and all of them say Google needs to come and put a data center here. So for us to use the services. Now that becomes a problem because how do we build a data center in 54 countries? At the same time we say, why don't ECOWAS, all of you, combine together and we'll put a data center for you. And they're like, there's no way I'm Nigerian, man. There's no way I'll put my data in Ghana. You know, it's not going to happen. And so those are the things that as African countries we need to think about. The cost of driving these transactions as low as possible so that we can get more people onto our platforms and get that deepening of inclusivity we want to add on.
Yeah. You know, the study showed that in developed countries, the number of branches is dramatically reduced, the number of bank branches. And so, and only in space, in 10 years, it reduced by 50%, become half. And only in a few developing countries where there is a growth of number of branches. But that growth is negative growth, not growing like the previous years. So the banking, soon it will become completely branchless, but that not only the branchless, it will also become the cardless as well, because the card it requires also the expensive resources. If we continue like using the current ATMs and POSs and using cards, as my colleague here said, the transaction cost will not be dramatically reduced. It will not bring actually financial inclusion. So it will move to the mobile, actually, I believe, not only to a mobile, but any service that can provide using the feature phones or low-cost phones, not only the high-end smartphones as well. So that must be the trend of banking. And the new digital revolution, the AI and the things will bring maybe the fundamental changes of the thinking that we're thinking from mobile to something AI enabled, which is that can enable me to do payments when I think rather than when I touch. I want to do more the bill payment now. Then I have to touch my phone. But in the future, that will not happen, I think. When I think that to be connected with, it will do those transactions as well. So that the lives of people will be simplified. Thank you.
Linda, I'd like to give you the final word.
So I think, and rightfully spoken, that there's need to have sensitivity around the economies of transactions. So, and we either play along as a scheme, or we become irrelevant. What we have done is then addressed even our value proposition to the sensitivity of the markets. So right now, as you said, rightfully say, Jack, that we're looking at the MDR. We have dropped that for domestic MCCs, what you call merchant categories, to match even to the mobile money, even better, to 0.3 for high volume daily use case drivers at this market. And so and then moving the technology from the card now to virtual card, which is embedded onto a wallet. So technology-wise, we're looking at that, improving the cost of acquisition, where the merchant looking at the POS machine at $250 or $80 or $80 to having a QR code, which is just matches the journey that most people are used to from a mobile money, but moreover and above that, including inbuilt fraud technology in the transaction with the latest, which is 3DS, all this. So a lot is happening in the payment world so that we are relevant, or we are able to solve from a domestic play and also from a cross-border and international play. Thank you.
Thanks very much, and I'd like to conclude, obviously, I mean, whatever is going to happen in the future, you know, Google, EdSwitch, MasterCard, ACRC, EU delegation, it has to happen through partnerships. And that's what we're trying to bring into this panel, the fact that we have to work together to make things happen, to make this revolution really, really happen. So would you please allow me to congratulate and thank very much the panel that joined us. Thanks a lot.